Yeah, I want to thank you guys for jumping on and learning a little bit more about the Work Opportunity Tax Credit and what it can do for your business and the bottom line. Here's a little bit of what we're going to cover over the next few minutes. What is the Work Opportunity Tax Credit? Who qualifies for Work Opportunity Tax Credit? What's the benefit from the Work Opportunity Tax Credit? What are some of the average statistics that you see out there in the various industries? And what ultimately is your return on investment from the Work Opportunity Tax Credit? So what is the Work Opportunity Tax Credit? Well, the United States Department of Labor defines WOTC as follows. The Work Opportunity Tax Credit is a federal tax credit available to employers for hiring individuals from certain targeted groups who have consistently faced significant barriers to employment. WOTC incentivizes workplace diversity and facilitate access to good jobs for American workers. And WOTC helps targeted workers move from economic dependency into self-sufficiency as they earn a steady income and become contributing taxpayers. While participating employers are able to reduce their income tax liability. So what are the targeted groups and who is eligible for Work Opportunity Tax Credit? Here are a few categories: unemployed veterans, including disabled veterans, temporary assistance for needy family recipients, food stamp recipients, designated community residents living in empowerment zones and or renewal communities. Vocational rehabilitation referred individuals are also eligible for the Work Opportunity Tax Credit, as well as ex-felons, folks receiving supplemental security income, and certain summer youth employees. Now, within each of these categories or targeted groups are underlying qualifiers. So the important question, the one you're probably asking yourself, what are the benefits of the Work Opportunity Tax Credit? Well, the maximum tax credit ranges from around $1,200 to $9,600, depending on the employee hired and which targeted group that they fall under. Now, standard credit, if a certified employee works at least 120 hours, but less than 400 hours, you can receive a tax credit of 25% on the first $6,000 of the employee's first year wages. If that certified employee works 400 hours or more, your company will receive a credit of 40% on the first $6,000 of the employee's first year wages, or $2,400. Example here, employee works 250 hours and terminates. Her year-to-date wages are $3,500. The WOTC credit is $875. That's 25% of that first $3,500 in wages. Now, a couple of the targeted groups, disabled veterans and long-term TAMP recipients or temporary aid to needy families, those are larger credits. The disabled veterans credit, employees certified under this category have a maximum wage cap of $12,000 versus the $6,000 in the standard credit. So for example, a new hire employee is certified for a WOTC program as a disabled veteran and continues to work past 400 hours. Year-to-date wages at 400 hours are $12,500. Your company receives a tax credit of $4,800, 40% of the first $12,000 in wages. The long-term TAMP recipients and employees certified under this program or category qualify the company to receive a tax credit of 40% of the employee's first $10,000 of wages in year one and 50% of the employee's first $10,000 of wages in year two, for a maximum 2-year credit of $9,000. Now that we've gone over what the Work Opportunity Tax Credit is, what the targeted groups are, types of employees that might qualify your company for a tax credit, and some of the benefits that you'll receive for hiring those individuals, now we want to take a look at some statistics. On average, across the industries that we service, we're between 15 and 20% certification rate. Now what that means is, based on the number of employees that you hire, one could estimate that between 15 and 20% of those individuals will be eligible and certified for the tax credit. Our average tax credit currently is sitting at about $1,750 per certified new hire. Now that also varies per industry, your turnover rate, etc. So the most important thing to consider is what is the return on investment for your organization. We put an example down here, as assuming 50 new hires per year at a certification rate of 20%. That means the number of new hires certified was 10 at an average credit of $1,751, means that we have credits earned of $17,510 at a total cost of $3,601. That gives us a return on investment of over 386%. Now that you have a better understanding of what the Work Opportunity Tax Credit actually is, the targeted groups that are eligible for the Work Opportunity Tax Credit, some of the benefits that your organization may be able to receive, average statistics, and finally, and most importantly, your return on investment, I would invite you, if you think this is something that would work for your company, simply click on the link below, schedule a 15-20 minute call. We can show you how simple it is to capture these credits utilizing our software and our processes. I thank you for visiting.